Hello and welcome back to goldstocktrades.com. Today we have with us Chris Krupe. Chris is CEO of Paramount Gold and Silver. Paramount can be traded as PZG on the New York Stock Exchange. Thanks, Chris, for being back here with us today.
Well, Jeb, it's always a pleasure, and thanks for calling me and talk about Paramount.
Chris, this past summer, Paramount's been very busy. Let's first focus on the recent news on the Don Esse deposit at San Miguel. Talk to us about some of the exploration success going on there.
Well, Jeb, a couple of years ago, we discovered the what we call the Don Esse vein, which is a 15-meter wide quartz vein, which has a fairly high-grade, relatively high-grade gold and silver, and it comes right off the Coeur D'Alene property in Mexico. And we were fortunate enough to be able to follow this vein at depth, and now we've extended it substantially, and we've recently put out some news to that effect. And I think it just keeps making that asset bigger and better. And we'll be revising our mine plan to take into account this significant extension of this vein.
Let's talk about the location there at the San Miguel Project. Talk to us, remind us about some of the importance of this area and the recent increase in M&A activity.
Sure. The San Miguel Project is in the Sierra Madre Gold-Silver Belt, which is a very old district. However, most of the mines are newly commissioned. These are modern-day mines, and there are a large number of mid-tier and large producers in the district. For example, Pan American Silver, Goldcorp, Coeur D'Alene, and most recently the entry by Carlos Slim, allegedly the richest man in the world, into the district by his purchase of a mine. We also have a significant infrastructure build in the last 10 years because all these mines required upgraded power, roads, water, all the ingredients you need to build a mine. Now, as for M&A activity, Jeb, I think it's important to know that this is a very, I would call it, hot area of Mexico, no pun intended. It's a very desirable area. It's not that far into Mexico. So you have, for example, Pan American Silver coming into the district, buying what was the Dolores mine, which was owned by Mine Finders. You have, as I mentioned, you have Minera Frisco, which is the $10 billion market cap miner owned by Carlos Slim, buying the Ocampo Mine for $750 million last year, cash. You have Alamos Gold, if you recall, buying Grade Resources, Agnico Eagle buying Grade Resources, and they're not too far away either. That was a big purchase as well. So there has been a significant number of new entrants into this area, and also to mention Argonaut Gold. So we are very excited about that, and we're very excited about the prospects of M&A in this district.
Let's talk about how your San Miguel project compares to some of those world-class mines like the Palmarejo. You recently, in 2012, you published a PEA. Talk to us about the quality of the San Miguel project in relation to some of those other projects that you just named that were acquired.
Absolutely. So, well, let's just talk a little bit about the PEA. So the PEA put a 14-year mine life on the project, and it's a very conservatively done PEA. In the 14-year mine life, we're projecting to produce an average of 57,000 ounces of gold per year and 3 million ounces of silver. So that's an equal split gold-silver project. It's got a significant net present value in the $700 million range. And I'm going to compare that, for example, to Coeur's Palmarejo mine, which is the fifth largest silver mine in the world. And if you look at the map on our website, Jeb, you'll see that we completely encircle Coeur D'Alene. We've got 400,000 acres, and they're the hole to the donut. So there's not much room for them to go. However, if you look at the economics, you can look at the PEA that we put out. It's substantially better than the one Coeur put out around the same time earlier this year, and I mean by hundreds of millions of dollars, bottom line better. So we're very excited about the district. We're very excited to move forward. Remember, Jeb, we have 1.5 million ounces of gold in the ground, drill indicated, and 100 million ounces of silver. That's, if you look at it on an equivalent gold basis, if you're using 50 or 60 to 1 even, you're talking over 3 million ounces of gold equivalent. That's and this is higher grade material. This isn't the sort of lower grade which you'll find in these big bulk tonnage targets. This is a very a substantial and significant deposit that's moving through the development stage right now.
Let's move to Nevada, where you have one of the top undeveloped Nevada gold projects, the Sleeper Project, which was a past producing mine. Can you tell us a little bit about the history of the Sleeper Project and why you're so excited about the next stage?
Well, absolutely. You know, we acquired Sleeper in 2010 for what I call a song. We bought it for $30 million in stock, and Sleeper was one of the most significant producers of its day. From 85 to 95, it produced 1.7 million ounces of gold, but the key was that the cost was extremely low. It was $158 per ounce cost, and that's a very, very low cost in even in its day. Now, the key to Sleeper is that it not only has the past producing mine, but we have a 50 square mile package around it that's extremely prospective. It kind of got forgotten in this area, but I'll tell you what, we spent $15 million drilling it, moving it forward, and you know, it's got the infrastructure that most mines would have to spend tens of millions, if not more, to build. It's got significant power. We've got our own water wells. We own the water rights to the entire basin, including water that's under in the ground on other people's projects, and it's got roads right through the property. I mean, these are things that you may not even be able to get these days. Now, the resource, we've taken it from 1 million ounces of gold, which was left when the thing shut down. It was shut down in the 90s because gold dropped below $300. It became uneconomic. So you can imagine how excited we are when we're modeling 1384 gold, which is still under spot. And we have 5.5 million ounces of gold plus 60 million ounces of silver. That's what we've done with this thing. We've taken it from 1 million to over 5 million. And I tell you what, and we're counting. So we think, I mean, I'm going to say this, but we think this is the largest undeveloped gold asset in the state of Nevada and probably in the U.S. And it merits moving now into the sort of development through to feasibility stage.
Talk to us about the how Paramount is positioned from a treasury perspective, that you have a strong treasury. You have also a very impressive shareholder base, and you're also in some of the index ETFs. This may provide good liquidity and leverage where we believe with the gold mining market is going to gain more interest. Can you tell us a little bit more about this treasury and the share structure and the shareholder base?
Sure, absolutely. Well, Jeb, I'm pleased to say that we have no debt on the books and there are no royalties. I believe in managing a pre-production company that way. We have our last reported working capital is $14 million, which we're burning $500,000 a month. So if you would do the math, that's 28 months of cash burn in the bank. So we have no pressure and no desire to raise money as many other companies our size do. Now, let's talk a little bit about the shareholder base. We have 37,000 shareholders, which we've picked up one by one over the years, and it's led by our largest and most significant shareholder, which is Albert Freeberg out of Toronto, FCMI. He has 25 million shares. He's been backing me now since 2007, and he's came true to his word. He exercised his warrants all the way up, and there are no more warrants on the books, which means there's no overhang. I'm one of the sort of second or third largest shareholders at 4 million shares, but we have a significant institutional base. For example, this is a Russell 2000 company, and I think people in America will appreciate that. There are very, very few companies like us in the Russell 2000. That accounts for about 10 million shares. You've also got, 10 or 15. You've got the GDXJ Junior Miners Index, which also holds about 15 million shares, and then you've got a whole suite of other ETFs. And what this does, Jeb, it actually creates an organic liquidity, and we're trading in the sort of average of 800 to 1 million shares a day in U.S. And I think that's very important, because many companies our size have very low liquidity, and you can always buy a stock, but it's very difficult some days to sell it. With the Paramount, you don't have that fear, and we've demonstrated that, and we're proud of that. We've also got a significant base in Europe, and now moving into Asia slowly as other parts of the world grab onto these stories, because as you know, as you hinted at the beginning, as with the rising gold market, you get incredible leverage on stocks like Paramount when we were sitting on 10 million ounces of gold in the ground.
Well, Chris, thanks so much for giving us an update, and congratulations on all the progress that you're making at both the San Miguel Project and the Sleeper Project.
Well, thanks for having me, Jeb, and I'd like to get back on the show in a little while as we kind of move into the fall and put some of our resource updates out.